People don't understand
Stacking in my bag. Yeah, stacking in my bag. I like crypto grind. Currencies flowing, every coins on my mind. My coin base the upper, watch the numbers climb. In this damn fine, feeling so prime. Hustling these protocols, known to the man. Emptying out my radar, I can't understand. Jumping on the wave, watch me move the plan. Holding diamond hands in this crypto land. Got my eyes on the prize, making moves like a king. Every transaction here, cash raises ring. Ride a blockchain, we won't never be slow. In the world of finance, that's the profit.
if you're holding real world assets, utility assets, you are a bank.
Yeah, of course, we go over the news and stuff, but we just do what feels natural when we be doing our thing.
You gotta get this money on. Yo, what's good, y'all?
Yo, what up? What up?
What up? What up?
What
We in here. What up,
We here.
everybody? Man, oh well, I didn't know you all had a video. Oh yeah, just a little intro video. What's up, everybody? What's good? We back. We got a couple updates. It was a slow morning. I'm gonna be honest with y'all.
Yeah.
It's a slow morning. I don't like when it's quiet because it's like what they brewing. It just keep you wondering, what do these people have in store? What are they getting ready to do? Why are they so quiet? You know what I'm saying?
Yeah.
It's not that quiet, but it's like, news
quiet
is a
enough.
little. Yeah, it's quiet enough. So yeah, it's December 23rd. So yeah, we get ready to find out what's going on. But yeah, y'all, we got some updates and stuff we're gonna go over today. We're gonna talk about these credit unions, because they're competing and small businesses redefine the banking relationship. So credit unions are getting real aggressive. We're gonna talk about real-time payments, and how they just did a stress test for bank infrastructure. So we're gonna talk about that. We're gonna talk about Russia's central bank signal shift to a retail crypto access. We gotta talk about the IMF. So the IMF confirms negotiation for El Salvador's. They're calling it a Chivo or Chavo wallet. That they have underway. So we're going to discuss that as well. We got to talk about some crypto.com news. As well, Ethereum. We're gonna talk about Ethereum today. We gotta talk about these chat bots. Because chat bots can now get high. Yeah, we're gonna talk. So I know we talked about it a little bit yesterday. So we got another video on that today. We're going, crypto.com. So yeah, y'all, we got a couple things to go over. So yeah, y'all just sit back and relax. We're gonna get into it. Make sure y'all like the live as y'all coming in over here on YouTube. Make sure y'all double tap the screen over here on TikTok. Let's run them likes up.
Run it up.
So
run it up.
While we running it up, because we're gonna have to start doing this every live. We need everybody to go on YouTube. Go on YouTube right now. I'm gonna do it with y'all. Actually, I'm gonna share my screen while I do it. Let's do it together. That way I can see if it pops up too. All right, let's go to YouTube right now. And I need everybody to type in BlockNation Arena. Type in BlockNation Arena. Let me see if we pop up. Oh, it's not popping up yet, D.
Yeah, because it's spanking new. It's spanking new.
Brand spanking new. I might have to
I just put it in the link in the bio.
Yeah.
For now, until
Block Arena, BlockNation. Yeah, we'll put the link in the bio. Okay, so we'll have it for the next live. But yeah, we got a new channel, sports channel. Need y'all to subscribe to that. We'll have a link ready. The page is brand new, so that's why it's not coming up in the search bar. I literally just made it, so yeah. All right, that's all good. Oh, look at us right there. Yay.
yeah.
All good. Okay. But yeah, let's run the likes up though. Make sure y'all hit that like button as y'all coming in. Double tap the screen on TikTok, repost the live, share the live out, y'all. But yeah, we're gonna get started here. Actually gonna start off with this. I want to talk about these chat bots. I mean these not chat bots. Hold on. This AI. Let me get to that AI article. Chatbots. Yeah, it is chatbots. My bad. Chatbots can now get high off code-based drugs and alcohol. What?
Yeah. Yeah, I know I talked about it yesterday, but I wanted to like read, a little bit more into it. So this article in short is talking about how someone created a code-based drugs that are meant to change how AI chatbots respond. So it's kind of like trying to make your chatbot act like it's high, drunk, etc. Yeah, this is a real story. So
What?
so a Swedish creative director named Peter Rudwall came up with a way to manipulate behavior of AI chatbots, just like like a Chat GPT or whatever. So according to the article, he launched a project called Pharmacy, right? In October, and Pharmacy claims to sell code-based drugs for AI. So what's code-based drugs actually means is it's not real drugs, and nobody is physically drugging a machine. It's basically text prompts, instructions, or code-like modules you could feed into your chatbot, designed to push the chatbot into a certain style of thinking. So either it'll be more chaotic, more creative, quote unquote, less cautious, more random and surreal, possibly more impulsive. So it's closer to prompt engineering package like a product, not chemistry. So what they're selling is, the site reportedly offers modules named after substances like cocaine, ketamine, marijuana, ayahuasca, alcohol, and a variety of others. And they cost about, between $30 and $70. And so their thing is to give your AI one of these modules and unlock a new creative territory. I know it sounds wild, but this is what you could do. You could probably do this without even these codes, just by prompting, right? Why the creator says he did it is because he's comparing it to famous musicians who experimented with substances to be creative, like Jimi Hendrix, Bob Dylan, Paul McCartney, etc. A lot of guys back in the day used to get high for sure, like the Beatles and a lot of those musicians back in like the 60s and 70s. I mean, a lot of musicians now still get high. You know what I'm saying? Hence, Future and all these other cats. But at the same time, his idea is humans sometimes use substances to, to change their thinking or impair their thinking, right? So maybe you could create a similar mindset shift in this LLM by changing the instructions you give it.
This is crazy.
It is, but it's not truly high. It's just that the AI models, have the output changes because you're instructing it to adapt to a persona or a certain rule set that mimics intoxicated behavior. So it's not high. It's just mimicking that behavior as if it was. So it could be more impulsive, less filtered, more associative. So it's very interesting. It's a very interesting read. If you want to look into it, hey man, play around with it. You could do a lot of things with these LLMs. So
this is crazy.
Talking about how it may increase unsafe behavior, not just creatively. So if someone pushes a chatbot to act drunk or ignore caution, it could produce lower quality answers, hallucinate more confidently, take bigger risks with advice, or try to bypass safety rules. So it's kind of like a hack in a way, yo. It's like a hack in a way. Either it's going to be beneficial to you or not. It depends what you're doing or how you're setting it up. But it shows people want like AI personalities, not just answers. People want some type of entity that they could connect with rather than just a generic bot. So an assistant that feels creative, weird, comedic, it is crazy. This pushes demand for style controls and persona tools. This may be a bag right here for anybody that's building though. If you're building, this may be a bag for you. You may want to look into this, and start building the chatbot tailored for certain things, not just to get high, but for certain things. So just saying.
What is the world coming to, gang? What in the world? That's crazy. That is crazy. Nah. Like that's mind-boggling. That's crazy.
Yeah, it is. So yeah. That was basically the gist of it.
Okay. So this next article is talking about credit unions. So credit unions compete as small businesses redefine the banking relationship. So basically this article is going to be talking about how small businesses are forcing credit unions to modernize banking. So credit unions historically serve small businesses well. So credit unions are, of course, member-owned, community-based financial institutions that long offer personalized service and build trust with small to medium-sized businesses. So that legacy still matters. But the way SMBs, small businesses, bank has changed. Today's business owners use cloud payroll systems, invoice and collect payments digitally, track cash flow in real time, expect tools that integrate with their accounting and operation software. Speed, automation, and visibility are now table stakes, not nice to have. So digital experience now defines a relationship. So small businesses don't judge a financial institution by branch visits or phone calls anymore. They judge it by their daily digital interactions. So if the tech experience feels outdated or clunky, that weakens the relationships, even if the institution is trustworthy. So some SMBs are already ready to leave. So nearly 22% of SMBs say they're somewhat to extremely likely to leave their credit union within a year if their needs aren't met. So that's a huge warning signal. So trust alone isn't enough. So why this matters? So digital tools are now the product. So small businesses expect real-time payments, digital onboarding, mobile access, integration with business software. So these aren't features anymore; they're core expectations. So small businesses judge banks the same way consumers judge apps, by how fast and easy every interaction is. So trust alone doesn't keep small business customers. Credit unions historically succeeded because small businesses trusted them. But now trust needs to be backed up with modern, seamless digital experience. Otherwise, SMBs still switch providers. So trust gets SMBs in the door. Usability keeps them from walking out. So experience price in most cases. So small business owners don't usually leave their credit union just because of rates. They leave because the experience is frustrating or slow. So if the app sucks, the payments are clunky, or onboarding feels like 1990, SMBs don't care how cheap your loan is, they'll leave. So rather than tearing out their core systems entirely, successful credit unions are partnering with fintechs, using APIs and modular digital tools, adding bells and whistles onto their existing infrastructure. So this lets them modernize faster and compete more directly with big banks and digital challengers. So credit unions that build the experience by assembling the best digital services win. So the rest risk being trusted but not preferred. So yeah, fintech partnerships are expanding. So nearly half of fintechs now partner with credit unions to provide digital capabilities like real-time payments and AI service tools. This helps smaller institutions deliver modern services without building everything themselves. So it used to be fintech versus credit union. Now it's fintech with credit union to build better experiences. So this is gonna have a domino effect, y'all. A lot of credit unions are not gonna be able to keep up with the technology. They're not gonna be able to innovate fast enough. So y'all are getting ready to see a lot of banks go insolvent. A lot of banks are getting ready to go insolvent. We have too many banks. So I think what this article is hinting at is a lot of banks are outdated and they struggle to innovate and they struggle to keep up with innovation. So a lot of those smaller banks that can't keep up fast enough or weren't being innovative, not keeping up with the times, they're gonna go in, and that's a lot of banks that's gonna go insolvent. We don't need all these banks anymore. We're about to have digital wallets. We don't really have a need for all these banks anymore. It's over with for that.
Yeah, nah, that's a fact. You know what I'm saying? A lot of they're either gonna go insolvent, or a bigger bank is probably gonna acquire certain banks, because they still want these customers. There's still people tied to these banks, so there's probably gonna be an opportunity for a bigger bank that's in the field, that's doing their work, doing their due diligence. That's gonna be like, hey, you don't know what's going on. Let me take your assets real quick, and I'll take on your debt, and because we know what's going on. But I want your customers. I want your data, because data is going to be the biggest thing. So if they can get that customer data, that's what they're going to do. So yeah, it makes
So
sense.
I think some credit unions are going to make it and some aren't. The same way, some traditional banks are going to make it and some not. It just is going to be winners and losers coming in this current system, because I mean, they said some small credit unions are innovating fast. So data shows that the smaller credit unions are rapidly closing the innovation gap with larger peers, adding real-time payments, better mobile services, and modern digital tools. So size no longer means speed. The smallest credit unions are moving fastest because they have to. Exactly. And I think a lot of them, I know some credit unions, I know Metal is working with credit unions. Bank Social is another that is also working with credit unions to help them innovate. So yeah, it's gonna be winners and losers here, guys. It's gonna be winners and losers here. So yeah, so SMB banking today is digital experience first, not legacy relationships. So credit unions risk losing members if they don't modernize. So partnering with fintechs is a fast path to modern services, and small credit unions are innovating faster than ever to keep up. So yeah, it's something to keep an eye on, y'all. Start keeping an eye on these banks. Keep an eye on your bank. If you're one of those people that bank with a credit union or a smaller credit union, make sure you're paying attention. Make sure you know what I'm saying. Make sure they innovating. Because, you know, you don't want to wake up one day and they like, yeah, we getting ready to go insolvent. It's over with for us. You know what I'm saying? That way you know how to move around. So, but no, it's a lot of changes coming to banking. It's a lot of changes coming to banking. And like I said, we're going to have some losers. Everybody not making it.
Yeah. Everybody not going to make it. So, you know, we're going to see what's up. We're going to see what's up.
Yep.
Damn. Okay.
Yeah, so, you know, I think they could have been hitting that Metaculus here. I know Metaculus is definitely assisting some of these credit unions. Bank Social is also assisting some of these credit unions. So I just want to put that out there. So do your homework on Metaculus. Do your homework on Bank Social.
Shout out to Hedera.
Yeah, man. Shout out to Hedera. Hedera gonna go crazy, for sure. So while we're talking about that, I want to play this clip from the DTCC right quick.
Okay.
Because I think this is very, very, very important for the crypto gangbangers of the space, the tribalism folks, the folks that feed into the tribalism in the space. I want to play this real quick because it's the DTCC. They were on a some type of Zoom call or something, but they're explaining how no single blockchain, public or private, is currently positioned to fully handle the enormous scale of DTCC's operations. So all you folks over there, all you XRP holders, Chainlink, Metaculus, what else? Who else y'all like? Stellar. I mean, just anybody that's tribal. Okay, whatever asset you like most.
XBR.
Yeah, it is multiple winners here. There is no one winner. So your best bet here is to be diversified. So don't get caught up. Don't get caught up in all of that. So I'm gonna play this clip real quick so y'all can hear it from the horse's mouth and not mine. Because I've been telling y'all it's multiple. I've been telling y'all it's multiple winners. What you say, D?
No, I said okay. Yeah, I want to hear this.
Okay. Yeah, let me put this on the full screen. All right.
And make sure you guys are double tapping the screen and make sure you guys are reposting. Make sure y'all liking the live over there on YouTube. Run it up.
All right, let me know if you can hear it, okay? Let me know if you can hear it, okay?
Yeah, yep.
Okay.
I can't. Yeah. No, I can't hear it. Can't hear it. Nope. What up, y'all?
Our participants. So while we're starting,
you can hear
I mean, all our clients are global in nature. Our participants. So while we're starting,
can you hear it?
Yeah.
Oh,
starting the journey. So I mean, all our clients are global in nature. Our participants. So while we're starting the journey in the U.S. and you notice these tokens, once you issue them and release them, they can move anywhere they want to move to, right? So they become global in nature, and we've taken great pains, if you will, to ensure that wherever jurisdictions they operate in, that they're compliant with the local rules and regulations. But again, we would advise all our participants and users of these tokens to get their own advice as we started this podcast. And you're absolutely right on the chains. I think you saw yesterday we announced the first chain that's out there, which is that we've partnered with, which is Canton. to your point, there is not one chain that's going to be able to handle the volumes that we're looking at. So one chain that's going to be able to Canton. To your point, there is not one chain that's going to be able to handle the volumes that to your point, there is not one chain that's going to be able to handle the volumes that we're looking at. So to your point, there is not one chain that's going to be able to handle the volumes that we're looking at. So by definition, we will be looking at other chains, but they need to satisfy requirements that are going to make our regulators comfortable that there's nothing funny happening behind the scenes. And I think you guys have seen the stories this week. So, we take great pain to ensure that from a legal and regulatory perspective, all these chains are above board. And what DTCC is working on is to, as we add these chains into our ecosystem, that we would have an orchestration layer that covers it, right? So if you tell me, all right, mint today on Canton, but tomorrow I need you to move it to Stellar or move it to SWI or wherever we want to go, Ethereum, will be able to do that while maintaining the appropriate records. So I think that's going to be super important, and that would be another phase, if you will, of where we're headed. Because yes, the headline today is we're going to tokenize everything. But in my head, it's like, okay, we did that, then what? Right? So we've got to give these tokens mobility, velocity, a purpose. That's where the collateral app chain comes in. This is where some of the orchestration layer comes in. And then working with our participants across the board to create more applications that would add value as we move down the chain. I mean, all our...
There we go. So there you have it. There you go.
Man.
For all the haters in the back.
Shout out to B Page. He said the DTCC and BNY Mellon just announced a partnership today.
Yes, the DTC. I was wondering. I was like, I ain't see that one, bro. But yeah, BNY. So BNY custodies ROUSD. I want to make sure we point that part out too. He said BNY custodies ROUSD. So please remember that.
And BNY is the oldest institution out here, like the oldest.
The oldest. So yeah,
they've been around since like the 1700s or some shit, some crazy shit.
Yeah. So I wanted to share that with you all. Okay. But be diversified, gang. It's cool to have like your favorite or whatever, but just be diversified. That's my main thing. And don't be, you know what I'm saying? Don't act like Christians and church people where they try and force you into liking something that you don't like. Don't fall for it. Because I feel like that's what it is. It's very tribal, very, it's, like I hate when I hear people say buy Bitcoin, don't buy nothing else. Because that's essentially what y'all are saying when y'all spread that tribal stuff. Buy Chainlink, nothing else matters. Buy XRP, nothing else matters. Like, what?
Yeah.
It's more than one winner, though. They're going to be using multiple, like...
That's toxic. Huh? That's toxic talk. That's toxic talk. Toxicity.
Very toxic. Very toxic. But yeah. But yeah, y'all. Lonzo said gotta have high conviction on these assets. It's a tough ride. I mean, it's a rough ride. That's a fact. That's a fact. Metaculus is very quiet. Yeah, no, they have been quiet. Too quiet for me. I need to see more. I ain't gonna lie. I need to see more. And not conspiracy theory. I have metal, so don't sit here and be like, Queen, I'm not hating. I hold XPR, I hold metal, I hold loan. I hold a couple of memes over there on metal blockchain. I'm a believer in the metal blockchain. Just stop sending me conspiracy theories. I need to see more. You know what I'm saying? I need to see more documentation. I need to see them doing a little bit more than what we done seen the last 6 to 8 months. Because it's the same old shit. Y'all got the same old arguments with metal. I need to see a little bit more. I ain't gonna hold you. I'm gonna hold it. I'm gonna hold it just because I see what they're doing with the credit unions. I see what they did with stable coins, helping some of these credit unions with these stable coins. So that's cool. But I ain't gonna lie, I need to see a little bit more from Metaculus.
So you need to see some more activity.
Yeah, I need to see some more because what y'all showing me, okay, that's old. What have they done in the last couple months? Outside of, you know what I'm saying? I need to see a little bit more. But when Metaculus does speak, they seem confident and secretive at the same time, but little they are saying is good enough for me, along with layer 0 XPR. No, what I've seen was enough for me too. It was enough for me to invest in it. So That's why I said I ain't talking shit. I hold it. I want them to be successful. I'm an investor. So, but yeah, I'm just saying I need to see a little bit more, and not conspiracy theories, not theories. I'm sick of the theories. I don't want to see that no more. I need to see a little bit more.
But they be putting out mad theories on it on Twitter or something.
I mean, yeah, it's just mad theories surrounding it. Like, how do I put this? Like, certain things that they're saying about the token, it's like, okay, but it's not any motion. Like they showed the whole the Fed, what is it with Fed now? They show that link, but it's no activity.
Okay.
I see them listed, but it's no activity. So who cares? You're listed, but nothing, and maybe it's just nothing happening right now. So that's why I'm still convicted. Like, maybe it'll happen later, but it's like I don't see anything going on. The only motion I saw from Metal this year was what they was doing with the credit unions and helping them onboard people with stablecoins. That was it. Other than that, I ain't seen anything from Metal this year. I'm just saying I just need to see a little bit more. That's all. That's all I'm saying. Need to see a little bit more. But it's cool that they're quiet, because the quiet ones be the ones that blow up. So that's why I ain't sleeping on it. So I ain't stupid. But but I just, what I'm saying, I'm not seeing a lot about them. And maybe that's
not stupid, but at the same time, want to see some more activity. That's it.
Yeah, I just need to see some documentation. The reason why XRP Army acts the way they do, and they're a little arrogant and cocky, is because they have documentation to back up their claims. They got documentation. Gotcha. You can't say too much to them because they got documentation, and Ripple got all these partnerships, and they're very vocal of XRP being the center of everything they do. That's straight from the CEO. So that is why the XRP Army acts the way. I'm just using them as an example. Chainlink, same thing with the link lovers. Whatever they call it. I don't know what they call themselves, but because I'm not tribal, so I don't get into all the gang affiliation, whatever link people call themselves.
The link lovers.
But the people who love link, like, documentation. We have conviction. We see what Link is doing. That's what I'm saying. We don't see that from Metal. We don't. That's just a fact.
Yeah.
So
I got you.
I need to see a little bit more. I ain't talking shit though. Like I said, I hold it. I just want to see some more though. I want to see some more because I want to buy some more, but I don't have enough conviction to buy more. So.
Nah, facts. Yeah, I knew y'all was gonna say something. The link. When she said the link lovers.
Somebody said the sneaky links. The sneaky links is like, that's crazy. I'm just saying.
Oh shit.
Yeah, somebody said supposedly Metaculus blockchain was to be used for UBI. I call cap. I call cap too until I see some documents, not theories. Documents. Show me something. Show me something and I'll shut up.
She said, where that paperwork? Where that paperwork at?
Where the paperwork? Where the paperwork? Where's the paperwork?
Man. Okay.
Okay.
I mean, that's valid. That's valid. Yeah. I ain't mad at you. So.
Okay. All right. So let's talk about this XRP ETF situation. We got a lot of motion over there. Since I just brought up Ripple, might as well go right into XRP. So XRP ETF extends daily inflow as total volume tops $1.2 billion.
Oh, yeah. So XRP, you already know these inflows. So the XRP ETFs are getting new money every day. New money. So even while some Bitcoin and Ethereum ETFs are losing money, but XRP's price isn't really going up yet, which is confusing to a lot of people. We already know shit's manipulated like a motherfucker, man. They trying to mentally tire y'all out and be like, okay, nah, not gonna do nothing. It's still cheap, y'all. It's under $2. It's under $2. You know what I'm saying? We didn't even think we'd get back here, all right? But now we are here. So look at the pros to this. So ETF inflow means more money is coming into an ETF, obviously, and the outflow means money is leaving. And the spot XRP ETF is an ETF that's supposed to track XRP more directly, not just the futures. So yesterday, XRP ETFs got about 43.9 million in net inflows. One of the best days since early December. Ooh, okay. The prior week they had about 82 million in net inflows. So that should give you a sample size of how big they expect this to be, because the prior week was 82 million in net inflows, and just yesterday was more than half of that. More than half of that. So the total net inflows since the launch was about $1.12 billion. And then the article claims that XRP ETFs have had 0 days of net outflows so far. So there's no money coming out of XRP ETFs at all. So institutions might be slowly building a position, buying slowly over time, because in the grand scheme of things, $43 million is a lot, but to these institutions, that's not a whole lot of money. It's not a whole lot of money, right? So not just jumping in and out for quick trades, they're not doing that. So even with all that ETF buying, XRP is around $1.90, was down around 1.26% in the past 24 hours, but still, ETF demand looks strong, but the price isn't reaching much yet. It's all good. This could happen for a few reasons, because the buying is spreading out, like I said, over time. It's not a sudden rush. Other people might be selling XRP at the same time, getting that fatigue that we always talk about, or canceling out the ETF buying. And then the ETF could be using the market structure, creation, redemption mechanics that don't instantly spike the spot price, right? And then the broader crypto market mood may just be weak. So it's a lot of different factors that point into this. And then extra details noted in this article, it notes that Bitcoin and Ethereum ETFs were bleeding while XRP keeps the inflows going. And it mentions that Peter Brandt saw a double top pattern and warned that XRP may drop a little bit more. So, but look at the bright side of everything. We're going into something that's different going into 2026. So now is the time, even if you just got in, because we just talked to some people last week that just got in crypto just in general. So this is a pro for them. This is a pro. But if you've been here for a while, I get it. But if you've been here for a while, you're still in profit at the same time. So are you really complaining?
Can't complain about being a profit. Can't complain. Paige said the price effect from ETFs take a few months. It did for ETH and BTC. Supply shock is on the way too. That's a fact. 2026 is going to be a big year for a lot of assets, especially real world assets. It's going to be a huge year. Get ready.
Exactly.
This is just an example. Y'all pay attention to volume and all that. It's about to be a big year. That's why I'm just bracing myself. This month went by fast, but it's low-key dragging because I'm just ready for 2026. Because I know 2026 is about to be crazy. I know we getting there. I ain't trying to rush it. You know what I'm saying? The old heads always say, don't rush it. Yeah, but
9 days. Silver just hit $70. Hell yeah. Hell yeah.
70. Damn. Silver just hit that 70 piece.
Congratulations to everybody that bought under $20 or that $20 range. Congratulations. That's when I got in. Maybe some of y'all got in below that, but damn. Congratulations, y'all. Congratulations,
we
y'all.
Doing it.
Y'all are up. Over.
Hey, shout out my man's Rick.
Facts. Y'all up. Facts. Shout out to Rick at Cost Metals. Over 200. That's 200% increase, right? Yeah, over 200%.
Damn. Yeah, niggas got in it. Yeah, Spider said he got in at $22. Yeah.
Shout out to y'all. Y'all are up. So you can't really complain. Some of y'all really can't complain too much, even though it's red in the market. Look, that's why you invest. That's why you diversify. That's why we always say diversify. If you don't get a lot of crypto, try to get some metals, insurance, whatever. Diversify, fam, across the board. That's what's gonna keep you on.
Man, shout out my man's Rick for putting the community on mad early. Rick was up here 2022, 2023, telling y'all get silver. So yeah, man, make sure y'all give Rick his flowers for sure. But he definitely put the people on game about the silver. So yeah, man, niggas is up crazy. $70. Woo, man. Okay. So yeah, but as far as XRP goes, that volume, it's just gonna keep being like this. And like Paige said, man, the supply shock is coming. Gang. Like,
hold on.
You better get it while supplies last. So let's I got another article. So let's talk about this real-time stress test for bank infrastructure right here. So we have real-time payment stress test bank infrastructure. So they really okay. It's go time. I hope I'm hoping y'all are seeing that. It is go time. That's why I'm so amped up for 2026. We got so much momentum going into 2026.
Yes.
So
What we got?
why real-time payments are shaking up banks and testing their tech. So real-time payments are no longer optional. They're expected. Consumers and businesses want money to move instantly with clear status and predictable results, no matter how they interact with their bank. But most banks and credit unions still run on legacy batch systems, designed to process transactions overnight or in delayed batches. So these old systems struggle with continuous, always on requirements like instant funding and payouts. So according to Majorie Tart from I2C, issuers that treat real-time payments as a strategic product, not just a connection to a payment rail, are better positioned to reduce costs and unlock growth. So key pressure points that expose weaknesses in old infrastructure include instant disbursements, account funding, account to account transfers, all of which require real-time availability of funds. Real-time availability of funds. Interesting. Rather than delayed processing. So relying on disconnected systems, different systems for FedNow, ACH, card pushes, causes inconsistent customer experiences and operational headaches. Real-time success requires unified orchestration, signal workflows, and centralized governance. So real time is now a baseline expectation. So customers no longer accept waiting hours or days for money to move. They want instant, predictable results, just like instant messaging or online shopping. So instant payments used to be a fancy add-on. Now they're the minimum expectation. People expect money in real time, just like they expect a text message to arrive immediately. So legacy systems can't keep up. Most traditional banking infrastructure was built for batch processing and not 24/7 real-time operations. So that means many banks are scrambling to modernize core systems that were never designed for continuous settlement and instant posting. So yeah, your bank used to process payments when the lights came on in the morning. Now systems have to work all the time, and that's a huge technical shift. So real-time success goes beyond rails. So being able to connect to a real-time rail like FedNow or RTP is only part of the solution. To deliver a great customer experience, issuers need real-time posting of funds, configurable workflows, fraud and risk controls, exception handling that works instantly, centralized governance. All of this must work behind the scenes to be seamless. So connecting to FedNow isn't the finish line, it's the starting point. Banks need a real-time mindset from top to bottom. So many institutions treat payment rail, FedNow, ACH, card or net debit, RTP, etc., as a separate system. That leads to inconsistency for customers, duplication of controls, higher costs, slower problem resolution, centralized orchestration, one system that talks. So they want centralized orchestration, one system that talks to all rails. Dramatically simplifies this. So if a bank has 5 different systems talking different languages, they won't get consistent instant payments. You'll get chaos. So customers care about outcomes, not rails or technology. They want money to move instantly. They want a clear status update so they're not guessing. They want the same predictable experience, no matter the channel, mobile app, online banking, merchant checkout. So customers don't care whether it's FedNow, ACH, or RTP working behind the scenes. They just want money now and clarity about where it is. So yeah, that's what they stress testing it now, y'all, because they need them real-time payments, because that's what's expected. They say that's the minimum. That's the bare minimum.
Yeah.
Yeah.
Damn, fam.
So it's that time.
Nah, it is definitely that time. I just wanted to shout out Divine. Thank you for the super chat. Shout out to Precious Metal Holders. Been holding since 2021 after seeing memes. Shout out to Rick again. But yeah, man. Nah, this is it seemed like they ready. Seemed like they ready,
No,
yo.
yeah, it sounds like they just need regulations. They're like, all right, you know what I'm saying? Everybody's ready to go. We're stress testing. It's go time. So man, and they're saying, according to this new CFTC chair that just got sworn in, I believe yesterday.
Yep.
he said that he's ready to get that bill done and on the president's desk. So that seems like his top priority. Going into next year. So next year gonna be a big year. I hope y'all getting y'all affairs in order.
Yeah. Nah, it's gonna be one of the biggest. I think what people was expecting this year is going to be like 2026, 2027. On one end, the economy is going to be looking crazier because a lot of people are still going to be losing jobs and a lot of things are going to get shifted. But at the same time, if you put yourself in position, you don't got to worry about too much of that pain regardless. Just like how some of you guys are up because of crypto or precious metals and stuff like that. You know what I'm saying? Like you're not going to be in as much pain as the next person because you paid attention beforehand, because these banks and institutions just got to push these buttons as soon as that paperwork is signed. They're going to push the button and it's going to go. As soon as the paperwork is signed. You know what I mean?
Yep.
So
they can't afford to bullshit. And that brings me into the next article. Exactly. That brings me into the next article. Russia's central bank signals shift toward retail crypto access. So you got other nations, other countries, they're all transferring over again. We have to be able to communicate. Yeah, we got to be able to communicate. So, so Russia may open crypto to everyday investors with limits. So what the article says, so Russia's central bank has put forward a regulatory draft that would allow non-qualified investors, everyday or retail investors, to buy and sell certain cryptocurrencies. So this represents a major potential shift from strict rules that previously limited crypto trading to only wealthy or qualified investors. So limited access with conditions. So non-qualified retail investors would be able to buy a defined set of liquid cryptocurrencies if they pass a knowledge test. What the? Hey, listen. If they pass a knowledge test, let me keep going. That's mad funny. So there would be a purchase cap of 300,000 rubles, which is $3,800 per year. That's a lot of control. How the fuck you gonna tell me how much I can invest? But they limited people to $3,800 per year for these investors. So qualified investors, which is wealthier or more experienced buyers, would have broader market access, though still subject to rules and excluding privacy coins. So Russian residents would be allowed to buy crypto on foreign platforms and transfer assets through Russian intermediaries with tax reporting requirements. So Russia is easing crypto access for regular people. So previously, only very wealthy or super qualified investors with high income or big portfolios were allowed to invest in crypto. Now, if this draft becomes law, regular Russians could legally buy some crypto assets in a limited way. So this is one of the clearest signals yet that Russia is loosening crypto rules, letting regular people get in with guardrails and not just the ultra wealthy. So okay.
They kind of have to though.
Yeah.
They kind of have to. They got to give the people an opportunity. You know what I'm saying? Even if they wasn't paying attention years ago like us, I'm pretty sure some people are like, okay, what can I get into? You know what I'm saying? All over the world, not just Russia, everywhere. But okay, Russia, I guess they letting the people get in with this last before this next leg up.
Yeah, because they know people gonna be bitching, because people are gonna be like, yo, y'all didn't even let us buy. You know what I'm saying? We didn't even have a chance at wealth because y'all didn't even let us in. So I feel like, because this isn't about payments in Russia. This is strictly about their focus on investment access. So that's what this is. So they're not even talking about payments right now.
And it's very psychological and fucked up because they let it get so bad in the economy where it's just like, okay, now you can get in.
The money. I can get in, but I ain't got the money for real. Like, I ain't got a lot to spend. So,
crazy.
Damn, that's fucked up. That's fucked up, gang. Because it's gonna be, and I feel like they doing that because Russia know over the next couple of years it's gonna be a lot of people getting ultra wealthy, and people gonna be like, y'all ain't even let us in. We ain't have an opportunity. It's fucked up. It's so fucked up.
They can be like, yes, we did in 2025. We gave you opportunity.
$3,800 max. That could have gotten you very far.
I mean, he ain't lying if certain
He ain't
things
lying
go,
though.
you know, he ain't lying, but shit, look at where it's at. So you're gonna have to really like be ingenuitive and figure out how you can get here. You know what I'm saying? When we was just talking on the phone, me and Ash, we were just talking about like how people are just gonna have to get creative in this economy, fam. Like even if you're a business owner or anything like that, you're gonna have to just get creative. You know what I'm saying? The best businesses come through the hardest times. The best businesses. Trying to tell y'all, go do the history.
100%, 100%. So yeah, all right. Well, Russia, we see what y'all doing over there. Y'all just giving the last opportunity, but it's like they ain't even gonna have time to really act. It's like if they ain't been paying attention, they ain't even gonna know what to buy. They don't even know what's going on because they so out of the loop. But it's always a workaround. So for the ones in Russia that did want to buy crypto, I'm sure they figured out to
they figured that out a long time ago. A long time ago.
Yeah, 100%, 100%. So yeah, let's talk about crypto.com real quick. So it says crypto.com hires experts to trade against customers.
Crypto.com, Crow. You love that ecosystem, right?
Man, love it.
Love that ecosystem. So crypto.com is hiring super math trading experts. So those are called quant traders to help run its sports prediction markets. These sports prediction markets are going to blow up even more. Just the prediction markets overall, they're going to blow up. So the controversial part is that the trader would be crypto.com's own market making team, which means the company could sometimes be trading against its own customers. Damn. So basically, it's a market where people, trade contracts, based on real world outcomes. Team A wins versus team B, just to give an example. So if you're right, you're going to make money. If you're wrong, you lose money. Simple as that. So what a quant trader is a trader that uses math, data, and algorithms to find chances to profit from the trades. So these are the super traders, super duper traders. So what market making means, market makers help the market run smoothly by consistently posting buy and sell offers that the customer can quickly sell, can trade quickly, and then the prices don't swing wildly because there aren't enough buyers and sellers. So that's what the market makers do. So what the job would entail is the quant trader would buy and sell sports outcome contracts and then provide liquidity and then analyze the data to find trading opportunities, manage risk, and try to maximize the profits for crypto.com. And then it talks about it describes that this is basically an in-house trading desk. And why people think this is a problem, because critics worry that this creates a conflict of interest because crypto.com runs the platform and its own team might be the house taking the other side of the customer's bets. Well, I mean, the customer knows the risk, right? If you're a customer or if you're gambling, because essentially what these prediction markets is gambling. You're gambling, fam. I don't care how many ways they try to twist it or what loopholes they do, is gambling, fam. So that could make the platform feel more like a sports book casino. It is where the house profits and the customer loses.
Mm-hmm.
These platforms don't want to lose money. You think these platforms want to lose money? No. So yes, they're going to bet against. They're going to have people on the other end of the trade betting against you. So what crypto.com says to reassure users is that it gives it gives the market makers a 3-second advantage window on the sport markets. So this is a line. So this line is odd, but it intends don't worry about the other participants. And then it does not rely on it doesn't rely on the trading as its main revenue source. And then what does it also say? It says its internal market maker has no pre-access to private customer data order flow. So they said they don't have access to the data. But in wider context, the whole shit is just growing, fam. The prediction market shit is just growing. And the article mentions Coinbase recently entered the prediction market too with Kalshi. And Kalshi reportedly raised $300 million at a $5 billion valuation to expand globally. So this whole shit ain't going nowhere because y'all know, just like I know, the NFL playoffs is about to start soon. So when the playoffs start, it's gonna ramp up even crazier, fam. It's gonna ramp up even crazier. So This matters because of trust, fairness, regulation risk, liquidity versus conflict trade-off. So, fam, hey, just know that there's somebody on the other end of the trade trading against you when you get into these prediction markets. Because if crypto.com's doing it, Coinbase is doing it, anybody that has these prediction markets, they're going to be doing that.
That's crazy.
Yeah. It's just that crypto.com is just like, we're just open about it. That's it.
Yeah, we ain't hiding it. Hey, at least they being transparent. At least they being transparent. That's still crazy to think about, though. Damn. Okay. We gotta talk about the IMF real quick. So the IMF confirms negotiation for El Salvador's Chivo wallet. I think I'm saying that they have it's called Chivo wallet that they have underway. So the IMF said negotiations with El Salvador over the future of Chivo Bitcoin wallet are well advanced. Yeah, so the IMF and El Salvador, so Bitcoin policy under pressure. So here are the negotiations explained. So the International Monetary Fund, which is the IMF, and the government of El Salvador are deep in negotiations, and now the country manages its Bitcoin initiatives, especially the government issued Shiva Bitcoin wallet and its national Bitcoin strategy. So as part of a broader $1.4 billion extended fund facility, which is an EFF arrangement, the IMF approved earlier this year, El Salvador's agreed to limit risky crypto policies, including limitations on public Bitcoin accumulation and winding down public infrastructure like Shiva. So the IMF says that the IMF talks about selling or winding down the Chivo wallet are well advanced, meaning the government may exit running the wallet entirely. So both sides are also focused on enhancing transparency, protecting public resources, and reducing financial risk tied to blockchain adoption. So this matters because El Salvador's Bitcoin experiment is being reined in. So El Salvador was the first country to adopt Bitcoin as legal tender and launched the Chivo e-wallet to support Bitcoin transactions. However, that bold experiment drew ongoing scrutiny from international financial institutions. The IMF has reportedly warned that volatility in public sector Bitcoin activity pose macroeconomic risks. So this negotiation marks a shift toward limiting direct government involvement in Bitcoin operations and aligning with global standards the IMF demands for financial stability. So El Salvador's Bitcoin project was historic, but now the IMF is essentially saying, okay, but let's make sure taxpayers aren't on the hook if markets slow down. So the Chivo wallet might be a sold or wound down. So the Chivo wallet, once touted as a way for citizens to use BTC for everyday payments, has forced adoption challenges and technical issues since launch. So the IMF negotiation to sell or discontinue this government-run platform suggests a retreat from that public infrastructure effort. So it looks like they have a focus on transparency and risk management. So the IMF isn't rejecting Bitcoin outright. It wants clear reporting on holdings, better risk controls, protections against financial instability. So this is typical for large multilateral lenders when a country runs novel monetary experiments while also seeking IMF support. This is making sure that public money isn't overexposed to crypto volatility, while still letting the private sector innovate. Y'all.
Man, the IMF. I guess the IMF is just like, hey guys, this is what we're gonna do. El Salvador is that country that is heavily tied with Bitcoin. They bet in the house on Bitcoin. I'm pretty sure they still up from when they first bought. I forget what price they bought in at, but they still up. But the IMF, if y'all don't know who the IMF is literally the organization that controls all these different territories all over the world. Like if you get a loan from the IMF, they pretty much control your territory now. So I guess the IMF controls El Salvador, either on the low ski or outright, because it seems like they, from what you just read, it seemed like they all the way in with them.
Yep, for sure.
Yeah.
Okay. So this next article we got is about Ethereum. So Ethereum apparently is vanishing from exchanges and the massive wallets absorbing it prove you aren't the target audience anymore. I thought that was an interesting headline. What is this talking about?
Yeah. So Ethereum, ETH. So a second. So Ethereum, what's going on with there? So basically, in this article, they're talking about how Ethereum is being bought up and taken off the exchanges, mostly by big institutions. But the fun internet culture side of Ethereum is mostly gone. So Ethereum might be turning into something more like a financial infrastructure, meaning that the plumbing behind the movement of money instead of a party asset that regular people trade for hype. So less Ethereum is sitting on exchanges, and it says about only 10.5% of Ethereum is on centralized exchanges as of December 21st, as of a couple of days ago. That's a big drop. They say it's down 43% since July. So when it comes to when coins leave exchanges, it usually means people aren't planning to sell them immediately. And then a lot of Ethereum is locked in staking. The article says about 35.6 million Ethereum is staked, meaning that Ethereum is locked up to help run the network and stakers can earn rewards. Locked Ethereum can be sold quickly, so it reduces available supply, and the institutions are holding a big chunk. The article claims about corporate treasuries plus spot ETFs control about 11% of circulating Ethereum, which is about 10.7%. And then corporate treasuries are around 5.6%, while the ETFs are around 5%. It also highlights the one big holder, Bitmine, with over 4 million Ethereum and plans to grow. So Bitmine has over 4 million Ethereum. And then ETH hit new highs, but it doesn't feel like 2021. ETH broke its 2021 high in August. Remember it went up to 49, 445, but there's no massive retail mania. So there's no huge NFT craze right now. There's no viral TikTok boom. There's no everyone's talking about it energy with Ethereum at all. So it's just institutional money that's heavy into Ethereum right now. That's what they want. That's the end goal for the control. And because Ethereum's going to be running a lot of those smart contracts, which is going to be a building block moving forward. So big investors may be buying Ethereum because Ethereum is useful for stable coins, RWAs, settlement rails, them smart contracts, etc. And then Ethereum allegedly holds about 12.5 billion of tokenized RWAs. And then stablecoin activity on Ethereum is huge. The article mentions about 1.6 trillion monthly stablecoin transaction volume and 172 billion stablecoin supply on Ethereum. So, damn, the thrill is gone. The thrill is gone when it comes to Ethereum. This is the institutional token.
Damn, the institutions are here. Are here. Damn, okay. Interesting. Yep. No, that was a good article. That was good.
Nah, it was.
Yep. But yeah, y'all, that was all the articles that we had for this afternoon. So we'll see if some more news comes out later on. And we'll see what we'll discuss later on. For those that are in the Telegram, we're gonna start, closing chats. Because we want the communication to be over on the Patreon. So I'm just giving y'all a heads up. For those waiting for the next bill cycle. Whether you get in at the end of the month or whatever, just make sure you get in while that price is $12, because at the New Year's, that $12 price is going away. So just letting y'all know for those that were, wanted to be grandfathered into a certain price point. So make sure y'all grab that. But other than that, y'all, man, make sure y'all join that DeFi Patreon or just join the BlockNation community. They're two separate Patreons, but for those that want to be a part of the community, the link for that's in the description. I also left in the description a link to the YouTube account that we just started. So we talk about the markets and stuff. What would you just talk about, D? The what is it called? The
what's up? Prediction
they
markets?
all get in sport. Yeah, prediction markets. Thank you. I'm sorry, I had a brain freeze.
Yeah.
The prediction markets. So yeah, it's time. Yeah, I'm locking back into sports because it's just about to be everywhere. So I'm locking back in. But yeah, we're gonna be talking about sports. So we got that channel up. And I actually will share my screen. So yeah, make sure y'all tap in. Make sure y'all subscribe to the channel. We're gonna start posting some content on there. It's called BlockNation Arena, so y'all can see it right there on the screen. Yeah, we're on Patreon, not Discord, Khalil. We on Telegram, but we moving everybody over to Patreon. And make sure y'all download that Patreon app as well. Make sure y'all got that app downloaded so y'all can get the notifications and stuff. But yeah, this is the we ain't posting no content yet. We literally just made the page. But yeah, make sure y'all tap in with us over here. BlockNation Arena. Go ahead and get that page going. Get the sports talk going. See some reactions. But yeah, other than that, y'all, that is all we had for now. That's all we have for now. So yeah, we'll see y'all on the next live. So tap in with us. Appreciate y'all. We do got that class coming up. When the link is available, we'll let y'all know. But we do got that class coming up with talking about Flare Network over there with DeFi. So just to because it's a lot of confusion. People got a lot of questions. So we're doing a master class on the Flare Network. So y'all look forward to that. But other than that, y'all, we appreciate y'all tapping in with us. I know we was mad late, but it was a slow morning with news. So, but yeah, other than that, we're gonna see y'all later. We'll see y'all this evening.
Yep.
All right, y'all.